All right, gang. So in this class, we're going to cover the bid price, the ask price, the mark price, and the Theo price. So remember, the options chain here, it works just like an auction, the same way we talked about in the stock market world, but in the options world, it works the same way. It is an auction. And so what I want us to begin here with is the option chain itself. We're going to take our signature layout here, and we're going to actually go to Theo price and mark price. So these right here is, this is a preset that's already in the system. All you have to do is just click that. And this is going to be relevant for this class so you can see how the market is created. All right. So if you take a look at this layout, we have the calls on the left side. We have the puts on the right side. Everything that's on the left side on the call side is the same thing that's on the right side and the same thing that's on the put side, basically. So we have Theo price column. Then we have the mark price column. And then we have the bid. And then we have the ask. Same thing on the put side. Bid, ask, Theo, and mark. All right. So as you guys already know what the bid is and the ask is, right? So the bid is where people are buying. They would like to buy at that bid. And then the ask, so the sellers, they're looking to sell at that price. That's what they're asking for. But before we can get to the bid and the ask, we have to begin with a fair price. So what is the fair price? Well, that's what this Theo price help us to understand. So Theo price stands for the theoretical price. And the Theo price it comes from basically a complicated math formula called the Black-Scholes model. And you don't need to know any kind of math. You don't need to do any kind of formulas, anything like that, because the platform is going to do all this math for us. But just to kind of give you a little background on how they complete all of this is that this Black-Scholes model is taking all these different variables and it's putting together to calculate these prices that we have in the options world. So in this particular contract series, we have the May 15th contract series. And so each strike price has to have a fair value, right, or accurate value. What is the real value of it? And this is all derived from the underlying stock price, the strike price itself, the days to expiration, interest rates, and volatility. So it's taking all these different variables and it's computing this price that we have here. We're going to take a look at the 265 strike. And we have the Theo price at $15.08. $15.08 is what the Theo price is. So we begin at the Theo price, right? And then from the Theo price, then we can make a market where we have sellers and buyers that want to, bid on this thing here. So we have the buyers, they want to actually get a piece of this action at $13.80, as we can see. The sellers here, we see that it's at $15. Now, this isn't accurate because it's, at the hours and everything. But once when the markets are open, you'll see that these prices will, they will be accurately calculated. So as you see the $13.80 and then the $15, that's the bid and the ask, right? The mark price is the price that's in the middle. OK, and the mark price is the price that it basically last traded at. This is a transaction. We know that we can get filled at this mark price, but think about it as the price in the middle. So for the bid one, we know they want to low ball. And then we know the ask, they want to actually, the sellers, they want to actually try to get this at a higher price. So it's just like everything else in life. If you're buying a vehicle, right, you have your sticker price. They have a markup price basically because the car company or whatever company, they have to make a profit. So that's what the sellers are looking to do, is to try to make a profit. So they normally will mark up the prices on these things. And the buyers want to get an edge. They want to actually get it down lower. The mark is where they meet in the middle. And this is where the transactions normally would take place at. But just so you guys understand, that's what the Theo price is. The Theo price, if you look at this at the top of the chain here, it has a date. And then we have the stock price. And this stands for the stock price movement. And then the vol stands for volatility, if the volatility changes. And you can actually get in here and play with this, and this will actually change the pricings of the options. So I can go in here and click the date, which right now I have the 8th. But if I want to look in the future, let's go a couple of days in the future. Let's go for the 15th. So a couple of days in the future, as you guys can see, the prices, you can see the prices right there. They're moving as I change. Look at the Theo price. Theo price is changing as I move the dates. That's one variable. The next variable, let's just say if the stock goes up. In fact, I'm going to click this thing to the right here. It's going to give me some bigger increments. And we'll click 1. All right. So $1 price movement adjustment. And then let's just say a little bit of volatility. I said things get a little crazy out here in the world. If Trump does a tweet or whatever president at the time, you see this video does something crazy and the markets are going to move. As you guys see, as I change these variables, the prices are actually changing. So you get that right here from the Theo price. This is just for our example that we're looking at. So the Theo price will then adjust these pricing so that we can actually see what it's really worth, right? So as I change that, we see at the 265 strike, the $14.66 is the fair price of this thing here. 1380 would be what the buyers are trying to, catch it at. And the sellers, they would like to try to sell it at $15, right? So you can see where the profit point is at. And as you're doing this live, you'll see that these prices will be reflected accurately, which in this case it's not. But you'll see that price would change. With the mark price, it would be the middle price between the bid and the ask, right? And so also keep in mind, where you see the bid and the ask, you can actually, this is where you'll place your options trades. So you're trading on options. Again, we do our analysis on the charts, but you have to come to the options chain to make your trade itself. So you wouldn't be able to actually make a trade on the Theo price, mark price, or any other tab except for the bid and the ask. Okay, so the bid and the ask is where we would make our transactions here. So as you can see, as I hover over the bid, I have a sell sign, so I can sell at this bid. And then here at the ask sign, I can buy at what the sellers are asking for. You'll see that it highlights says buy. However, the way that we normally do this and the way that you guys will be doing this is that you will come to this bid or this ask, either side, and you will right click any place between the bid or the ask, right? Right click that. And this is how we make our transactions. If you want to come in as a buyer, or if you want to come in as a seller, you just highlight either one of these tabs here. And then we will actually dial into the different strategies. As you guys can see, we have the singles, verticals, back ratios, calendars, diagonals, straddles, so many different options. So there's a lot of things over there, which we'll cover some of those in our strategy course coming up soon. So you'll see all of that. But this is how you actually place your trades. And I'm going to just place one real quick. Let's say I want to buy this call here. And I'm going to just place single, okay, because that's the type of transaction we're looking at. And when I click on that, we're going to get this order entry tool that's going to show up. And this is where we're going to place it. This is where we're going to negotiate our deals, right? And so we can see that the Theo price is $14.76. Do I really want to actually buy this at $15? I notice what the sellers are asking for, but everything is negotiable. And I want to get an edge. So I'm actually going to actually bring this down because I know it's going for $15, but let's say I'm going to bring it down because I know I'm not going to get the real value, but I still want to get that edge. Let's take it down to $14.85. You have the right to actually negotiate. So I'll go in there, I've changed that, and then I'll submit my order. And I can just click confirm and send, and it's going to actually give me my order dialog confirmation. And all I have to do is click send, and then that order is on its way. Okay, so when you're live, you'll see that the order will get filled or it won't get filled. Either way, that's how you do it. But you do all of that from the bid and the ask, right? So that'll conclude this session here. I hope you guys found that very useful, and we'll catch you in the next class.